Hey guys, Mike here. So, but what a day in the market on Friday. What a push down, and then the recovery was absolutely insane. Zero DTE started rolling in after lunch, and boy, we were down almost 1.5% on the SPY, almost 2% on the Qs. Qs hit the 50-day moving average. I think the S&P did as well. And away we go from there. And I mean, I can see people's faces looking like this right here. Oh my God. And then, of course, it's like, oh, look, we're alive. So we'll see if it carries through till Monday or Tuesday. If we get any carry through right now, a certain level's got to be reached. Again, a lot of it was like this, oh, they're supposed to do a vote and open up the government and all this fun stuff, and that did not happen. But what's funny was you knew something was circulating because all of a sudden altcoins in the crypto market start going up 8, 10, 15% out of nowhere, and you're like, what's happening? And that was before the market turned. And it was like, that's weird. But I guess we kind of saw what happened there. So, we'll see. Tomorrow's video, of course, will set up the week for us and everything. We got a lot to go over in that one. Today's answering your questions. You had a lot of good ones about Gamma and everything else. So a lot of stocks you asked about. So we're going to cover a lot of stocks, Upstart, Amazon, and a bunch of others. So we'll get into those right now. And the first one here comes from Brian. He says, what is the likelihood of a wild year-end rally if a clean CR is passed in the next week or so? I'll just say this. It would increase the odds of a year-end rally. I don't know about a crazy one, okay? So it would just take a lot of uncertainty off the table. And remember, I've showed you, I've done videos for members and you guys in the public that shutdowns do not affect the market 99% of the time. The problem you see, though, is when they take this long and carry out this long, you're seeing the stuff with the airlines, right? So that's kind of everybody's going, ooh, and I even put it in the morning news brief on Friday showing like every day they have listed out like how many more like flights they're going to have to cancel, right, or slow down. And so that creates a problem. And so it's just another thing to layer on top of everything else going on. But it's not really the shutdown per se that's causing what's happening in the market right now. It's just another thing to add to the list, okay, of being super overextended, all this high beta stuff, getting a pullback, everything like that. So, and it's creating some anomalies in like the repo market, things like that nature. But if they just open it back up and again start spending like drunken sailors and doing what they normally do and get out the way, yeah, the market would most likely like that. Now, next one says, where do you look for Gamma? Okay, or where can you look for Gamma? And that leads into the next question, which is also talking about Gamma. Could I explain more about negative, positive Gamma and how the market makers behave/hedge around this? Well, let's get into this because this is pretty important. And then I'll talk about where you can go see Gamma and stuff. So let me just read this, that way you can pause and read this. And again, you can go over all the Greeks you want to in the options market. There's a lot of things about Gamma. I just use it for certain purposes, and it's really got to do with this. So Gamma is important in the market because it measures the rate of change of an options delta relative price changes in the underlying asset, essentially acting as the acceleration of an options price movement. We know how important the options market is. Saw that Friday to the market. Now, risk management. It helps traders anticipate, forget traders, we'll talk about market makers and dealers, right? Manage how their directional exposure, the delta, changes as the market moves. High Gamma means it is unstable and changes rapidly, increasing risk for option sellers. Short Gamma and requiring frequently portfolio rebalancing. And so now, let's think about this and how I like to use it and how you hear me talk about it all the time. What are we doing most of the time in the market? The market's going up over 70% of the time. So what does that mean the market makers and the hedge funds, or not the hedge funds, but the dealers are doing? They are hedging, trying to say delta neutral by buying the shares because they're selling us the calls and the puts, right? And so that's why if you ever ask yourself like, wow, how is this market going up? Or how is Tesla going insane right now? It's a mega cap stock and it's going up 10% today. That's what's happening, right? Because we're going up the majority of the time. So you never hear me talk about negative Gamma until we finally start to go down because it's rare. We're only going down the market, less than 30% of the time. But I start to mention it and bring it up in the morning news brief saying, hey, just be aware of this area here. If we go below it, the opposite starts to happen where the market makers and dealers now have to hedge by selling the shares, which creates more downward pressure. You saw it Friday morning, you saw it Thursday, but think about it this way. And we're in positive Gamma, think about swimming. And when you're in positive Gamma, the market's going up, you're swimming with the tide. All of a sudden, that tide shifts on you, starts pushing against you. Now you're swimming against the tide. This is when we shift into negative Gamma. Just kind of think about it in that way, okay? So that's where, when I talk about Gamma, that's how I talk about it. Again, when you're dealing with options, it's a whole different thing. You need to learn all the Greeks, go have fun doing that. I'm just dealing with it in that sense. Now, where do I get it? I use Gamma Labs, get the Gamma Flip line. I also use it for other things, but I also use the Gamma exposure on quant data. And this gives me like certain levels. You saw this Friday, it started to build up like crazy, this one level, and that's exactly where we hit for the day. Okay, so this is what happens as well. So, and there's many other places. You can go to Cheddar Flow, Unusual Wells, and a lot of others. So put where you get yours in the bottom of the comments. Hope that helps. Now, hey Mike, recently, new viewer here, just wanted to ask, could you talk a little more about market breadth? I've heard it a few times now after you've mentioned it in one of your videos, and then also maybe a bit more in depth on the VIX and what's applying in the market. When you look at breadth here, I mean, here's the ticker symbol you can use in TradingView to show you this. And again, breadth is terrible. I mean, it's just terrible in the market, but I'll show you something. It's been getting worse and worse over time. This isn't new. Okay, the reason why breadth is so horrible is because, like I've showed you, we're so concentrated into these 8 stocks basically at this point in time. So this is S&P 500 stocks above the 50-day moving average. You see it going down since like July, I believe it is. Now, what does that tell you? What that's telling you is, you might notice in some of your stocks in your portfolio, they aren't going up. They're either going sideways or down, but then you might say, wow, the market's going up. And so you'll see this decrease over time. See, look at this. We used to be up at this line right here, like 90-something%, right? That was normal for stocks above the 50-day moving average, even going up to almost 100 at times. And so that is not the case right now. And you're fixing to really see this when we bring up the stocks above their 200 moving average. But first, what you can do is really bring the S&P up over this, and you'll kind of see like more of a shorter term type pullback or your smaller pullbacks. You can see the breadth is decreasing, but the market's doing what? Still going up. And then eventually you'll have these dislocations start to correct themselves. So you'll have the breadth going down, the market's going up, and then finally you'll get some kind of correction, whether it's 3%, 5%, 10%, whatever it is, okay? Because those larger stocks can only carry us for so long, and the market goes, wow, these valuations, you've heard this before, right? Oh, the valuations are getting out of hand. And then we have some kind of pullback or a correction, whatever happens first, okay? And you're seeing that right now. But the breadth's been going down since July. You can't even like make this stuff up. What's crazy is, look at this number. The high is 68% of S&P 500 stocks above their 200 moving average. That goes back to the beginning of 2025. Now I want you to go back each year over the last like 4 years. Watch how bad this has gotten, how concentrated we are. Look at this. Stocks above their 200 moving average in 2024 got up to 84%. We ain't even sniffed that. If you keep scrolling back, you can see that back in 2021, we got up to almost 100% of stocks above the 200 moving average. I mean, look at that. Isn't that crazy? And so this shows, one, the concentration, how unfreaking sustainable it actually is. I mean, it just really is. We can keep trying to say this all we want, but that's unsustainable. I mean, look at that. That's nuts. But again, you only know that if you look at breadth, but also the fact you'll hear people kind of old schoolers that go, breadth's everything. And I'm like, no, it's not. And the reason why I've been saying that is because of what's happening in the concentration, and why I keep showing you those charts showing just how much, like I showed you the other day. Look at semiconductors. It used to be 7% just like a year and a half ago, 2 years ago. Now it's doubled, 15%. Look what happened Thursday and Friday when semiconductors rolled over. Oh, now you got to see, a quick 1% down, 1.5% down, 2% down the Qs. You're like, whoa, okay, what's going on, right? Anytime those 8 stocks roll over, see ya, it is quick, right? It goes down very quick. And so we kept saying, I said, what, 2 or 3 years now, I said, you can't really have a major correction without those going down. And you'll see, you pull up the S&P 500 stocks above 200 moving average, you'll see it. That breadth keeps doing this, and the stock market keeps doing this. Because just more and more money has to pile into it. And the reason why that breadth indicator has changed, and it's still important, but the reason why it's changed is because of passive investing. I covered this in another Saturday video if you've never seen it. Passive investing has eclipsed active investing, which means that's that stuff you see in the 401ks and all these other investment accounts where they just buy like this. Don't matter what the price is. So when you're asking yourself, who's buying Nvidia at all-time highs? All billions and billions of dollars are flowing in at all-time highs because they had no choice. It's the rules. They just got to buy. That's what they got to do. That's what's happening. Passive investing eclipsed about a year ago, I believe, it eclipsed active investing, and we're talking about billions of dollars, okay? Hundreds and hundreds and hundreds of billions of dollars, okay, that flow in, and it just buys at any price, okay? And so that's what's kind of changed it. But with the breadth, what you want to look at is say, okay, I know we're declining, no different than the RSI or MACD, right? There's this divergence going on. It will correct itself. You don't know when, and good luck trying to play it and guess it. Okay, but it always corrects itself. So it's more like a warning signal to say, okay, that's interesting. That's also another signal to say, I need to be getting into these stocks. Like I need to, I've been saying for 3 years, what are these stocks? They're like safe havens. They may be tech stocks, but they're the safe havens because they have all the cash and the stock market can't go without them. It can't. The hedge fund managers, always people managing all these funds, there's no way they meet benchmarks or anything else unless they start piling these stocks, okay? And that's why I always look for like the laggards in that Mag 8. When I was looking at Amazon forever going, it's a laggard, it's a laggard. And I was buying like, yep, got to buy. You got to, right? So no, I don't want to buy Nvidia up here at all-time highs or Avgo at all-time highs. But anytime you get a 15, 20% pullback, 30%, whatever it is, they're going to start, passive investing is still going to keep buying it, and then eventually active investing is going to flow right into it as well, right? Because they know the market can't go up without it. It just can't, okay? So hopefully that was a long answer, but hopefully that makes sense. Just play around with it. Now, next one comes from Donald, and it says, hey, Mike, question for Saturday. What is your 3-day rule? This isn't my rule. I didn't make this up or anything. It's been around for many, many years. It's just saying if a stock does a drop, for example, like Meta, you don't want to be a hero and try to jump on a grenade here. Just wait 3 days to see if it works its way out. Now, a lot of times this doesn't work on the high beta stuff, right? You've seen it many times. They manipulate it down, and then they'll just push back. Even on the Mag 8, they do it, right? So sometimes that's the case. But in this case, especially if it goes below the 200 and then it comes up and rejects off of 200, just wait 3 days at least before you start jumping on. Again, not financial advice. Do what you want to do. Please do what you want to do. And you can see in this case, it would have saved you, right? You wouldn't be coming in at 670. You'd be coming in almost 600. Okay, you saw a green little deal today. It finally got in that gap today. But that's a 3-day rule, okay? And sometimes it works, sometimes it don't, but still. UNH have been another good example. Now, next one's from Rebecca, and she says, thanks for all your insight. Will you cover Uber? I sure will. Uber's an interesting chart. It was performing really well. Now it's just consolidating, right? Waiting for its next move right here. It's been consolidating since September. Hadn't really participated in a while when it comes to the market and everything. Again, it's just been in this range from like 91 to 102 up there. Had its earnings, obviously. Dropped on that, but the market was dropping too. So, it's at a support level, if you want to say that. Below the 50, below the 100, 50 is curling over. Again, it doesn't have to come down and touch the 200 or anything like that. There is one interesting thing about this chart. I'll show you at the very end. I'm not calling for that. But if this continues to drop, if the market wants to continue to sell off, 87, right there's your next support because you got the 200 in that. Really 85, 87 because there's a gap down there as well. We'll also add this trend line out here, which of course we broke down below. So that'll be resistance coming up. The 150 will be resistance coming up if we move up. One thing to watch out for this one, and again, it's holding, it's consolidating right there. And you never know if it's just consolidating or this is going to be distribution happening and everything. But look at this, rounding top here. You have rounding bottoms, which you've seen a lot of on the way up, and then sometimes you have rounding tops. And this one, and that's really ugly, so I'll just throw like a dome over this thing for you so you can actually see it. But, just watch out for this. Again, to break out of this, all it has to do is break over the 102 and it's done. But I'm just saying, be careful, watch out for that just in case. Now, next one comes here from my town, Vegas. Interesting. Can you review CRM and Amazon on Saturday? I sure can. CRM is like a stock of death, as you can see. Big M pattern brought it down. This thing has participated zero in the market rallies. Since, I guess, mid-2024, really. You can see another M pattern here playing out. And, I mean, every time, I guess somebody put it, I heard somebody say that the market just doesn't trust this stock at all. Doesn't have earnings until December, you can see. But, again, we talked about this multiple on Saturday videos. Like, man, if you can get above this level here, you can see where the resistance goes away a lot, and this thing could fly. No doubt about it. And we thought we were going to get that, but now where's it at? Oh, boy, not good. And it does not want to break 234.50 because look where it's going. So you don't want to see that, not at all. And the biggest problem with this one is you have these two trend lines now, which again, if it breaks above it, it can move above. But what this one has to have, just like some other stocks I'm going to talk about as well, is it has to have the market turn up. It is proven it cannot move without the market at all. There's just no way. Why do we know that? Look at the chart when the market was roaring. It was just tanking, right? So it has to have the market move for now with it to pull it back up. So if we, for whatever reason, that rally on Friday was just a false flag and we start selling back off next week because the government still shut down or whatever, you think this thing's going up or down? I mean, that's really what you got to look for. A lot of stocks will go against the market, right? Tesla, when the stock market's going down, you'll see Tesla go up sometimes. Now, some stocks do that. CRM has not been that stock so far, right? It just hasn't been. And when you look at the moving averages, 200's declining, 100's declining, 50's rolling over. So again, all of this is going to be resistance unless they can get some kind of news event or the market really starts to turn back up. You know, this one's just one of those ones that's stuck in the doldrums right now. So now Amazon here, you can see it's above all its moving averages, coming back down, dipping into this large gap right here after earnings. And so no surprise there. You got two big gap up, still got a gap above. It is at support now. It did dip below the previous all-time high, came down into 238.09, held right there. That's where it bounced, where everything bounced, because a lot of stuff was coming into bounce points. So no surprise there. And it's pretty easy. I think if the market turns up, clearly this thing's going to turn up with it, start heading higher. It was a laggard. Now it's not. Came down to a discount as well. If it does want to continue to sell down, if the market continues to come down, that is, and just look for that little box area right there at the 0.79 fib, around like 230.50 right there. That will be a good bounce point if the market wants to continue to sell down. Again, momentum, you don't want to fall below that moving average right there, but again, it's not below 50 on the RSI. This hasn't rolled over yet. You look at the weekly, still above 50 on the RSI. It just had a bullish MACD cross on the weekly, so you know this one's fine for now. I think it's just going to follow the market. It's as simple as that. So starting to become more of a winner for the MAC 8 there. Upstart right here. Can you cover that one? Sure. This is another chart of death right here. I mean, this thing, we talked about it a couple weekends ago, right? I said, look at that high on the weekly. Ain't that a lower high? That's a lower high. Not good. Never even came back up and reset a new high like so many stocks did. And then, of course, it has plummeted 58% in 102 days. So, whew. And this is a high flyer. So, you know, it moves down hard and it moves up hard. Good thing is it hadn't taken out April's low yet. Starting to bounce like everything else. We'll talk about the sector as a whole in just a second. But you can see it's in a major discount. Obviously, all the fair value caps have been mitigated. And so this one, you want to joke and say it has nowhere to go but up at this point in time. But remember to see this line right here. We covered this a few weeks ago. The MACD on the weekly was not below the zero line completely. The red line was not. Now it is. And then you got the RSI down here. Now, this looks very familiar. Remember this right here? The exact same thing happened here. And what'd you get? A huge rally. Of course, what happened? This was the April low. That's the difference. This is where the whole market turned up and rallied. So we're at a much different point. We're, 3% away from all-time highs at this point in time. So again, this one not only needs to turn for itself on the daily, you can see it's oversold. It's in an area where it could bounce. But the big thing is the whole sector needs to turn. This is the global fintech I told you about. I'm not going to tell members, I don't know if this is just consolidation or distribution. Well, clearly, what was it? It was distribution because it had been doing this since July and then boom, fell right on out. All right. So it's not just Upstart, all of them, even like a SoFi started to sell down. PayPal can't get out of its own way. Every single pop gets dropped like a rock. Affirm actually did pretty well in earnings. So, that helps it out, of course. Upstart, it's okay earnings, not really great. So, that's kind of where you're at with Upstart. You need the whole sector to turn. You need the market to turn. Now, next one here, ask about Build-A-Bear chart. Okay, I remember you had mentioned that mostly institutional ownership and will be a good buy if it drops. It's down about 35%. This is an interesting one here because, yes, you're in a major discount here at the golden pocket. You're at support as well, as you can see right there. From one of its previous all-time highs, you got a couple gaps below. If this wants to continue to sell off to the downside right here, but it is down, about 40% actually. And so, again, we'll bring that line up there. So a lot of confluence right there. There's also one other, which I'll show you on this. That is the 200 moving average. So it's sitting right on the 200, support, golden fib, all that good stuff, which is a good thing for a bounce right here. Now, whether or not they're going to continue to push this thing up, that's a whole different story right there. But it is a good bounce point right here. But when you look at a longer-term trend line, in this case it drops at 0.79 fib, intersects it, goes back to 2023. So that's also a nice bounce there, and we'll fill all those gaps as well. And if anybody's asking why they're talking about Build-A-Bear, it is simply because this stock right here, who institutions own, is a lower float stock, has performed exceptionally well coming out of 2020. But even if you just count 2022 right there low, it's up 515%. Not bad for something that builds bears. Now, next one says, will you comment on GSAT? This one's interesting. When I first pulled up, I recognized this ticker symbol from 2021. And just look at that consolidation right there. Crazy range, right? Now it sounds like, wow, it broke out. That's really, really bullish. And I'm going, wait a minute, what is this down below right here? Is this a stock split? So I knew something was up with this because I don't remember it being this expensive. And they did a reverse stock split to stay uplisted on the exchange is what happened. You can see 1 for 15. So it was a much cheaper stock, okay? Now, I knew something else had to happen. So I'm like, really? What's going on here? Well, they ended up getting some kind of rumors about a buyout, maybe from SpaceX, and it's like a crazy buyout. So of course it popped. So when you're looking at this one, if that remains to be true, then yes, you should be good to go. It can continue to go up because one thing about this one, look at this. Here's the high. It didn't even come through and done anything like that. It didn't even set a high yet, right? And you can clearly tell in that range if people are swing trading the brakes off this thing. But again, if those rumors aren't true, you're probably most likely going to fall back down into that range. So, be careful. Hopefully it's true. Hopefully you're making a lot of money. Okay. Now, next one here says, is FI stock a buy now or wait till listed in NASDAQ? Oh boy. Another chart of death. We talked about this the other weekend on this drop. My goodness. I mean, this is another one. Since 2025, market's been going up. Or it's since March, really. Look at that thing, down 73%. It's up to you if you want to buy this. And I know people, when stocks get down like this, they're like, oh man, it's down here, I can buy it. Then you go to the logarithmic scale, and again, breaking a trend line from 1987, like nothing good. And I know you like the bottom fish, and again, it's so far below the moving average. You're thinking it's got to move up. It's got to move up, and maybe it does. I mean, you look at this thing, and we put momentum indicators, and you're like, wow. And I want to show you something you will rarely see unless we were in a crazy market crash like 08, 2020, the monthly. Look, this thing, oversold on the monthly. That is something you will rarely see on any stock unless we're in a market crash or the stock is literally crashing itself. I mean, it is an amazing thing to see. So this thing is so oversold, you would think, maybe, especially when you go to the lower time frames, like maybe you're going to get a bounce. Now, how far that bounce is going to be, that's a very good question. And this is definitely one of those ones. I'm glad people waited 3-day rule if you did, right? Because it's continued to go down. Now we're on day 8 from this collapse right here. Starting to see a green candle. This is clearly another one that cannot move without the market because it couldn't move with it. So it needs market momentum with it as well, unless you get some news, which, could happen. But another thing you could probably try to do is maybe look for market structure. Look for it to actually start forming higher lows, at least on like the 4-hour chart maybe, because it's down so much. And again, it's coming into thin support. If you look right here, this was an area, and we'll zoom in right here, where it was resistance, then turning into support, right? And then got that bounce right there, right before they did a split about 6 years ago. And so it is doing that. But another option to look at, and it's just an option here, if you're just dead set on like wanting to get into the stock, and again, not financial advice, do what you want to do. I was looking at like longer dated call options, this thing going out 6 months, and they aren't expensive. Like right there at the money, I think it was like $600 or something, per contract. And so, if it's setting, I'm just making this number up, but it's setting at 60 and you're buying at 600, you're gonna come in at 66 if you execute that call option somewhere in that realm. And so if your projection 6 months out say, oh, this is gonna be an $80, $90, $100 stock, well, you're good to go, right? Instead of sitting there buying 100 shares, what is it going for, like 6,300, whatever it is, dollars, you're spending 600, and so it gives you an option to execute to buy the shares. And if you're already in the stock and you're saying maybe that's another way to DCA in for yourself, I don't know. Instead of picking a stock that is literally just a falling knife right now and going, oh, I think this is it. And then all of a sudden we come in Monday or Tuesday next week, or maybe we do get a bigger pullback. This thing's going down with it. I'm just spitfiring, or spitballing here and saying stuff like that. Another way to even fund that is to do your research on selling puts, cash secured puts, to fund those call options. A lot of people do that. Okay, so just putting out there, or selling the cash secured puts to be able to get a sign if you really want to get a sign, and they'll pay. The market will literally pay for some of the shares for you, right? Because you'll get to keep that premium no matter what. So just try and think outside the box for you if you're really into that kind of stuff. So let me know how it works out. I'm definitely curious. Now, last one here says, enjoy your visit, Mike. Thanks. I appreciate that. Who do you like better for the next 3 years, Nvidia or AMD? That's such a loaded question. Personally, I think it just has to do with this. If AMD can grow their data center revenue and improve their margins, you're talking about, I didn't look off the top of my head. What is it? Is it 300 billion market cap for AMD and 5 trillion for Nvidia right now? I'm not sure, but it's just like a bunch of people said. I think I was one of them say you're going to be able to double your money over the next year with AMD versus Nvidia, and that's what happened, right? But the problem with AMD is their margins. They're lower, like, margin products are growing faster than their larger margin products, and so that's why you see Nvidia, they just dominate data center revenue, and that's why their margins. I mean, it's not even the same ballpark. Seriously, it really isn't. Okay, and so if they can start really moving into that, and again, I know, I'll be the one to say it. It's not that really has to happen for the stock to move up and increase a lot more than Nvidia. I mean, we all know that's the case, right? And we all know stocks move up for different reasons. But if they could do that, it would be a good catalyst for it over the long run. So, I personally, I own them both. And so I don't have to pick either one because I love them to death. But what's funny, when you look at actual performance, there might be some, instead of those two, there might be some freaking black sheep out there. You're looking at MU going crazy, and all these other ones going crazy. I want to look at those as well. So I own both of these. I don't have to pick one. So let me know on the bottom what you think. And so anyway, I hope you guys got some out of it. I know it was a longer one. Really appreciate you guys who watch and stuff. Please hit that like, subscribe button on your way out. Think about signing up for the membership. Less than McDonald's combo at $7.99. Just hit the first link in the bottom. And I will see you guys tomorrow to set up the week.